What's up YouTube? In today's video we were going to talk about the 4 phases of price delivery, how to identify them and use them to your daily buys, and also we will add these 4 phases to the weekly profile to make them high probability. So let's hop into the PDF and discuss each phase alongside with examples. So the first phase of price delivery is consolidation. Consolidation is characterized by a range-bound price movement in a price occurring between a swing high and swing low. So consolidation is actually, this is daily chart example. The price will hang around the swing high and swing low. We will want either side of the range to get manipulated and then expansion to the opposing draw. Actually, consolidation is the indecisive phase. Market maker will trap the trader. Some of them will think that the trend is going up. Some of them will think that the trend is going down. So the market maker actually trap the traders. Then they take one side of the range and then expansion to the opposing side. Think of the accumulation, manipulation, and the distribution. Here we are on the first example of a consolidation. We will try to align the phases of price delivery with the weekly profiles to make it more high probability, and then we will look for the intermediate time frame change in the state of delivery, and then we will look for entries. So here we are. The Monday had some sort of reversal candle from this order block. Despite of the structure, we would need the one side of the range to get rain, which will be a manipulation, and then we will target the opposing side of the range. Let's go over this price action. So the Tuesday and Wednesday had a consolidation. So for fairing the logic of the Thursday consolidation reversal profile, we would need one side of the range to get ran through, and then we will look for the opposing draw. Forwarding the price action. So we had taken the upside of the range. Now the real move will occur to the downside. So going into the intermediate time frame, and now remember the MXM's next day model video and the daily closures. So we had a closure below this candle and also the previous day. So we had a closure inside. This signature indicates that the price is moving to the opposing side. Going into the intermediate time frame. Here we are on the intermediate time frame. You can see the consolidation range clearly. This is opposing side, which is our drawn liquidity, and this is the reversal structure. As you can see, we had a previous day run and close back inside the range. Now this series of up close candles will act as a change in the state of delivery. So we will mark the opening price of the last candle. This will be our high probability change in the state of delivery. So for the weekly one shot one kill entries, we could enter here, put our limit order, and then target the opposing side or 1:2. Or we could also target this low for a weekly range target, one shot one kill. We can target that as well. Let's roll over the price. What's happening? So we tapped into the auto block or the change in the state of delivery. Now looking for the downside move. As you can see, we had a 1:2 target hit there and the opposing side of the range. Let's see if there's this low is getting hit. We trade into a new day, and finally our objective is reached for the day. Now the second phase of price delivery is expansion. Expansion is characterized by the price will move in one direction following another phase such as consolidation, retracement, or reversal. So actually the expansion will occur after a reversal or a retracement in this example, a reversal into expansion, then a retracement into fair value gap, or stop run and then another expansion. Or we could take the consolidation range low and then expand to upside. So if you think in terms of the weekly profile, let's take example of Tuesday reversal. So if the Tuesday had a reversal, then the Wednesday and Thursday will expand. So in this case, we have 2 days of expansion. If the Monday reverses, then the Tuesday, Wednesday, and Thursday will expand. And obviously, Friday will return back into the range. Is a function of TGIF. The maximum expectation per expansion is 3 days expansion. So in expansion, we cannot trade in expansion without a relevant swing point or the low of the week in terms of the weekly profiles. So we will need a established swing point, and we will align the candle closures with that, and then from there we will trade to the upside. So we will need a manipulation below the weekly opening price and bullish sense, and then expansion to the upside. In simpler terms, we would need a swing point to trade away from. So let's go over the charts example of the expansion. In this example, we will discuss the expansion phase of price delivery, and we will try to add the space to the weekly profile. So let's skip the Monday's price action. I'm not trading the Monday, so we'll leave it there. Going into the next day open, the Monday traded into this low. The sell side is being taken, so we will need a better run to the downside, and then we will expect the expansion to the upside. Let's roll over the price action. As you can see, here we took the Monday's low. We will go to the 1 hour time frame to determine and see the intra-week change in the state of delivery. So here is that low, we have taken that. Now we will confirm the intra-week reversal. So if we had a closure, if the price reverses and we had a closure above this last down close candles, so we will consider that as a change in the state of delivery, and we will want higher prices after that, pushing. So we have the change in the state of delivery, which will confirm the intraday reversal. Going to the daily chart, we are having a closure inside the range, taking the Monday's low, so we would expect higher prices. In my opinion, if you are new to the weekly profile, so I would not want you to trade the reversal day. You will let the reversal day play, and then you will trade the continuation. So in this case, I'm trading the reversal day on a higher time frame for the weekly one shot one kill. It is sort of swing trade, and it doesn't rely on the sessions, etc. So we had a closure relatively near to the change in the state of delivery, so I will enter on the very next candle my stop below this invalidation point. If the price closes here, this will be my invalidation point. If the price expands to the upside, we will see that. Letting the price action play, we will see what's happening. Finally, our weekly objective is met. How can you add the expansion pace to this price delivery? Remember that in expansion pace, we would want a reversal point from which we will trade away and expand to the other side. So in this case, we had a reversal point to the downside. If we mark out our weekly opening price, then we had a manipulation to the downside below the weekly opening price, and then expansion to the opposing side. The next phase is retracement. Retracement, price cannot move in one direction, it needs to accumulate more orders and order to continue expanding. During retracement, price pulls back into the point of interest, such as order block, fair value gap, in sweeping the short-term low. So in this schematics, retracement to the short-term low. So we sweep the short-term low and then expansion to the upside. The price expanded, then a retracement, a stop hunt, and then expansion again. Retracement to order blocks. Price retraces into this bullish order block and then expanded away. Retracement to fair value gap. So price traded into fair value gap. This candle closes inside the range and we had expansion to the upside. So now let's go over the charts example of the retracements. In this example, we will trade the retracement phase of the price delivery. So we are trading upward from this point of reversal. We had a few retracement. We would try to engage in this retracement. So letting the Monday play out. The Monday traded to the downside, but we do not have the daily swing point yet. So we would wait for Tuesday's price action. So letting the Tuesday play out. The Tuesday traded into this opposing close candle. Actually, on the correlated pair, this low is taken. So I would consider that as an order block. So I'd want to see the price trade to the upside from this point. On Tuesday, we didn't close inside the range of the previous candle. So I will leave the next day to decide whether the price is going up or not. Letting this play out. This is 9:30 and this is opening. If the bullish bias is still intact, I would want to see a close above this candle. We would consider that as an order block. So we quite had a closure, but not yet. Now we have a closure above this candle, but if I'm entering there, my stop will be too wide. So I'll go to the lower time frames, frame a trade there. Now on the 15-minute time frame, we had a change in the state of delivery, the intraday, which was happened right at 10 a.m. Now we will look for the continuation order block entry. So letting this play out. I would want to see a closure above this candle. For an order block, we traded into fair value gap and had a stop run. Letting this play out. So we had another run on the current low. So now if we close above this series of candle, this will be my order block. And here we have closed above this candle, so I will enter on the very next candle. My stops below this low. And here we don't have relevant targets, so I will aim for the 1:2 risk to reward ratio. Letting this play out. Actually, I entered here. And here we had our risk to reward target. Reversal. Reversal is the last stage of price delivery. After the expansion phase ends, the price reaches a certain draw on liquidity or a key level, leading to a reversal back into the range. A reversal is actually a change in market sentiment. A price reaches a certain draw in liquidity. It could be a quarterly shift, or it can trade into high time frame key levels such as monthly, and then from there we will be having a reversal. A reversal is a strong signature, so we would need a candle closures and daily chart confirmation to know the market sentiment is shifting. In this case, we had a stop hunt. The price traded below the series of up close candle, which indicate a bearish oracle. There we had a closure below the up close candles. We have a closure below the up close candles, so it means the price is reversing and the sentiment is changing from bullish to bearish. Same example here, we had a large candle reversal, then we had a change in the state of delivery on the daily time frame, then the price retraces into some short-term lows and then expanded to the upside, closing above the down close candles. which is confirming that order flow is shifting to the upside. For the final example of the reversal, here we are on the NQ daily chart. We don't have a relevant level to trade off. We have the Tuesday candle close inside the range of the Monday's candle. So according to the next day model, we would want to see downside prices. So keeping that in mind, I will go to the intermediate time frame. Here we have the change in a state of delivery, not a clear one. I would want to see the main threshold of this close candle to be respected for the downside price. So letting this play out. We would want to see a closure below this low for the change in the state of delivery. And let's look for the SMT divergence. So here we are on the ES. We took these highs, while on the NQ we didn't took. So this is our SMT divergence, which will confirm our idea. If I have to enter on this very next candle, my stop below this invalidation point or the SMT high, we hit our target reach on both of our pairs. Thank you for watching the video. Make sure to subscribe to the channel and do like the video if you want more videos like this. So let me know in the comment section.